Welcome to the deep dive. Today we're zeroing in on a tech titan many of you track closely. Cisco Systems, they're a really foundational player, especially in the whole world of networking infrastructure.
Absolutely. And it's a really pivotal moment for Cisco, actually. Their latest earnings report drops on Wednesday, May 15th, 2025, right after the market closes. We're talking a market cap around $190 billion, ticker CSCO. This isn't just routine stuff. It feels like a potential turning point.
Exactly. So our mission in this deep dive is pretty clear. We want to dissect Cisco's current standing in what's frankly a fiercely competitive tech arena. We'll pull out the crucial insights and then really focus on what to watch for in that upcoming earnings report to, grasp their future direction. We've got two main sources guiding us today, an analysis titled Cisco Competitive Landscape and a detailed Cisco Q2 FY 2025 earnings preview.
Right. And for you listening, staying ahead of these major shifts in tech is, well, it's crucial. Our goal here is to cut through the noise, deliver a clear understanding of Cisco's situation, and pinpoint what really matters right now.
Okay, let's unpack this then. Cisco operates in a landscape just packed with rivals across all their key businesses. And it's pretty widely acknowledged that their traditional networking core is facing some significant pressure.
That's exactly what the Cisco Competitive Landscape source digs into, breaking it down segment by segment. Maybe we should start with enterprise networking.
Yeah, good idea. So who are the major competitors Cisco is really facing head on in that crucial area?
Well, primary challengers are Arista Networks, that's ANET, and also Juniper Networks, JNPR. What's particularly interesting, I think, is Arista's success. They've been gaining market share, especially in data centers and those huge cloud hyperscaler environments.
How have they managed that?
Largely with their switches. They offer greater speed and programmability. That's been key.
Right, faster programmable switches. What makes that such a big advantage in those spaces?
Well, think about it. In those high-demand places like data centers, speed is just critical, and the ability to customize network behavior through programming, that offers some serious efficiency gains. Arista has really leaned into that need.
Interesting. So where does that leave Cisco in the broader networking picture?
Cisco is still dominant, definitely, in campus and enterprise networks. That's a huge market. But the report does point to what they call margin compression.
Margin compression, meaning?
Imagine they're selling something for a certain price, but because of all this competition, they're getting pushed to lower those prices. It just squeezes their profit margin on those sales.
Okay, that makes sense. Let's pivot then to cybersecurity. That's obviously an increasingly important area. Who are the main contenders challenging Cisco there?
Yeah, huge area. In cybersecurity, the key competitors include Palo Alto Networks, PAN-W, Fortinet, Vivid-TNT, and also CrowdStrike, CRWD. A major trend, a driving force really, is the need for security solutions powered by AI, artificial intelligence, things designed to protect both individual devices, endpoints, and entire networks.
And how is Cisco positioned against this shift towards AI-driven security?
That's a really good question. Cisco doesn't currently have a leading position in what's called endpoint protection, securing individual laptops, phones, etc., or an XDR, extended detection and response. XDR is sort of a more unified approach, pulling different security tools together for a better view of threats.
So what's their big play then?
Well, their huge acquisition of Splunk for a massive $28 billion, that's their major strategic move. They're betting it will bolster their capabilities in SIEM security information and event management, basically analyzing security logs, and also in observability, which is understanding system health. But it's really important to remember, integrating something that big, it's complex, and it's definitely still in the early stages.
Right, integrations like that take time. Okay, what about the collaboration space? WebEx specifically, another area with some heavy hitters.
Absolutely. The main competitors for WebEx are, well, Zoom, SETI Nemers, and of course Microsoft Teams, MSFT, which is just everywhere. A key trend here is a general slowing in that rapid growth we saw in the hybrid work market during, the pandemic years.
And where does Cisco's WebEx fit into that picture now?
It's challenging. WebEx faces a tough fight because Microsoft often bundles Teams with its broader enterprise software licenses. That just makes Teams a super convenient, often cost-effective choice for a lot of businesses. So while WebEx is still a relevant, capable platform, it's certainly not the dominant force it might have been previously.
Okay, let's shift focus a bit towards the future cloud and AI strategy. Who are the giants Cisco is navigating around there?
In the cloud space, the big three are obviously Amazon AWS, Microsoft Azure, and Google Cloud. No surprise there. Now, Cisco's strategy here is quite specific. They seem to be focusing on enabling AI at the edge of the network.
At the edge, meaning closer to where data is actually generated and used.
Exactly. Through their networking infrastructure and their security offerings, that seems to be the angle.
So it sounds like their approach is more about empowering AI adoption for others rather than being a direct cloud services provider themselves.
Precisely. You've got it. Cisco's main business isn't operating those massive cloud data centers like AWS or Azure. Instead, they sell their hardware and software to the cloud providers and also to enterprises using cloud services. They aren't really a cloud-native giant in that sense.
But they still hope to benefit from the AI boom.
Oh, definitely. Their strategic hope is to capitalize on that huge demand for AI capabilities through various product lines, through integrations. Obviously, Splunk is huge there, but also their SecureX platform, Meraki cloud networking, even their Silicon One chips.
Okay. So if we pull all these pieces together, what's the overarching picture of Cisco's competitive situation look like to you?
Well, if you connect all those dots, Cisco is undeniably, well-established, diversified, profitable. But they are navigating an incredibly competitive landscape, just intense. They're up against these nimble, cloud-first rivals across basically all their core business areas. Plus, they're seeing slower growth in their traditional hardware infrastructure sales. And there's just immense pressure on them to successfully shift their revenue model towards more predictable, recurring streams like software subscriptions.
Yeah, the competitive landscape source even used that pretty vivid image calling it a knife fight across cloud, security, and software. That really hammers home the intensity, doesn't it?
It really does. And that intense competitive backdrop, it makes this upcoming earnings report all the more significant. It's not just a routine financial update. It's a really critical indicator of how well Cisco's strategic shifts are actually working.
So turning to that Q2 FY 2025 earnings preview then, what are the key financial figures and sort of the general expectations we should be watching for?
Okay, so according to the preview source, analysts are expecting non-GAAP EPS earnings per share of about $0.83. That would be basically flat compared to the same quarter last year. So no growth expected there. Revenue, though, is projected around $12.5 billion. That's a pretty significant year-over-year decrease, roughly 14%.
Wow, 14% down year over year. That's substantial. What are the main reasons behind that drop?
Well, the primary factors seem to be ongoing adjustments in inventory levels across the tech sector, sorting things out after that pandemic surge. That coupled with more cautious spending from enterprise customers. Budgets are tighter, maybe. And it's crucial to remember, Cisco themselves cut their full-year forecast last time, citing an order slowdown.
So like we've been saying, this quarter is really about execution and showing some signs of stabilization.
Okay, so beyond those headline numbers, EPS and revenue, what specific things will investors be scrutinizing really closely in the report and the call?
There are several key things. First, any signs that enterprise demand is starting to pick up again. That'll be watched like a hawk. Second, the market wants to see solid revenue growth, specifically from their security products and those leveraging AI. Shows the growth there. And third, the performance of their software subscriptions is absolutely vital. They've publicly stated that goal of getting over 50% of revenue from recurring sources.
Right, and a huge piece of that recurring revenue strategy has to be the Splunk integration, correct, given the price tag on that deal.
Oh, absolutely paramount. Following that $28 billion acquisition, which closed last fiscal quarter, any updates on how Splunk integration is going will be critical. Investors will want specifics. How is Splunk helping deliver AI-powered observability? How's it boosting cloud data security, expanding data analytics? They'll want details.
What about the more technical financial stuff? Margins, buybacks, dividends, anything specific to watch there?
Yes, gross profit margins will definitely be under the microscope. They still face headwinds in the traditional hardware business, that pressure we talked about. But any positive impact on overall margins from a growing mix of higher margin software, that would be seen as a big positive signal. And yet, investors will also listen for any news on stock buybacks or dividend increases. Those can often help support the stock price, provide a bit of a floor.
So thinking about what could actually move the stock after the report, what are some potential bullish catalysts? What would be good news?
Okay, on the positive side, strong specific metrics showing Splunk integration is working well and contributing. That would be huge. Any kind of positive surprise in overall enterprise IT spending trends would also be very well received, suggesting maybe the cautiousness is easing. And of course, if their software revenue numbers come in better than expected, that directly supports their transformation story.
Makes sense. And on the flip side, what are the potential bearish risks? What could send the stock lower?
Conversely, um, another cut to their financial guidance for the future. That would likely hit the stock hard. Weak numbers for new orders, or hearing about longer sales cycles, meaning deals are taking longer to close, that would also be concerning. And finally, if it looks like their security and AI products just aren't ramping up fast enough, not contributing meaningfully to growth yet, that could definitely put downward pressure on the stock.
So it really sounds like it boils down to their outlook, their commentary on the future, and proof of execution, especially with Splunk.
Precisely. Cisco's commentary on, the broader economy, how it's affecting IT spending, the level of uncertainty they see, and crucially, their progress integrating and actually leveraging Splunk. That will be absolutely vital for investors trying to gauge the company's path forward. Look, if they can manage to beat these somewhat lowered expectations and offer a cautiously optimistic outlook, there's definitely potential for the stock to react positively. But yeah, another disappointing outlook could certainly damage investor confidence further.
Okay, so wrapping up our deep dive then, it seems clear Cisco is navigating this landscape filled with, well, significant challenges, but also some real opportunities as the whole tech world keeps shifting so fast.
Yeah, absolutely. And this upcoming earnings report really acts as a critical bellwether. It tells us how effectively they're actually tackling those challenges and trying to seize those opportunities. It'll give crucial signals about whether their big transformation strategy is gaining real traction and if they can truly compete against those more agile cloud-native rivals.
So here's a final thought for you, our listeners, to consider. Looking ahead, how will Cisco's major strategic bets, particularly that massive investment in Splunk, ultimately shape their long-term success in this constantly evolving tech landscape? Will their traditional strengths, in the foundations of networking, be a strong enough base for this transformation? Or will the competition just prove too intense, too difficult to hurdle? And maybe think about the broader long-term implications of all this for the future of enterprise networking and security as we know it. Definitely a lot to think about, and Cisco's earnings next week will surely give us some important clues. Thanks for taking this deep dive with us today.